All right, good morning. Thank you for joining the NetSuite Partner Spotlight presented by Meridian Business. Today we're featuring Avalara, and George Padilla is going to take us through the concept of tax compliance done right. This is a series of partner events that Meridian is hosting. Next month we will be covering mineral tree and accounts payable automation as well. But today we will be working with Avalara, and I'll let George introduce himself in just a moment. But you might be asking yourself, who is Meridian? We're a NetSuite-based certified partner, full-service professional services organization focused exclusively on NetSuite, helping folks understand how NetSuite can impact and assist their business from a pre-sales angle of solution configuration consulting, business needs assessment, full service implementation, and after go live, support, training, and system optimization services across a variety of business processes, from accounting and finance to CRM to full operations and supply chain management, up to and including e-commerce capabilities. With that, I will turn it over to our partner and esteemed guest, George Padilla, Strategic Alliance Manager with Avalara, to take us through the wonderful world of sales tax automation. So George, take it away.
Thanks, Doug. I appreciate it. Exciting times. Thank you so much to you, Doug, Jenny, and Meridian for allowing me to present today. My job is to just manage the relationship between Meridian and Avalara. So if any of Meridian's clients ever have an issue with Avalara, just go ahead and reach out to Doug. He'll reach out to me, and then I will just interject and try to get things resolved as quickly as possible. So that's a little bit about me. What I'm going to talk about today is the current state of sales tax and managing it. Industries with the highest compliance risk, the 5 W's of automation. What is sales tax automation? Who needs it? Why automate? Who should automate? And how to choose the right automation software, and then where to start. If you have any questions, feel free to put them in the comments section in the box, and I'll be more than happy to answer them at the very end. So let's start with why sales tax is so complicated. The reason why is because there's so many things that trigger that requirement to collect sales tax. And that's what Nexus means. For those of you who don't know, Nexus is just the obligation to collect sales tax within a certain location. So if you have affiliates that work for your company, or if you're attending a trade show, if you're doing commissions to resellers, if you have remote employees, if you're doing direct online sales, or if you have inventory in a certain location, just to name a few, those are things that can trigger that nexus. So for example, if you're going to Vegas to a trade show and you're there for a certain amount of time, you are required to collect sales tax because they assume that you're there doing business. In the times of COVID, if you're in a place that has, let's say you're in Birmingham, and all of a sudden you have someone that lives in Florida, which is not Birmingham, but like Mobile, Alabama. It's about half an hour to Florida, but that person lives in Florida and your office is in Birmingham. Because of COVID, you are now required to collect sales tax because that person is now a remote employee. So any remote employees that live in a certain state, if they're working full-time, may be required to now collect sales tax for your company. So there's so many different ways of requiring sales tax. You have to figure out what is the correct sales tax rate. So a lot of people think that just using zip codes is accurate in itself. Well, I'm going to show you why that's not. So take Denver, for example. There's a place in Denver called Greenwood Village. Now, if you look here, you have 80111, which is the area code. But you would think, okay, let me just collect the sales tax in that area. Even if you do a zip +4, I'm going to show you why that's not effective because of this. And it's because of gerrymandering or redistricting, depending on what side of the political fence you're on. You look at all of these different sales tax rates, and sales tax rates are based on congressional districts. And because of those districts, you have this little sliver of orange that is in a completely different area than what the main area is. And because of that, you'll see that these are all the taxes associated to it. So if you just use a zip code, you would not have the correct sales tax for this particular city. So filing and remitting sales tax, you have to figure out the state and local jurisdictions. You have to identify the sales tax return and filing dates. So some states are quarterly, some states are monthly, some are annually. And then you also have to collect a proper amount of sales tax. And if you don't, you have to collect those exemption certificates. Because even if one of your clients is not taxable, it doesn't mean you don't have to collect that exemption certificate to show why you didn't collect those taxes. And that's one of the first things that auditors look at when they're conducting their audits for your companies. And then you have to submit the correct forms. In Texas, it's a really easy form to file sales tax. However, in California, it's a 15-page return, and everything's broken down to the city level. So adding to the confusion, in 2018, there was a Supreme Court case called South Dakota versus Wayfair. Now, to talk about this properly, you have to look at a Supreme Court case back in 2001 called North Dakota versus the Quill Corporation. So North Dakota versus the Quill Corporation was a Supreme Court case to where the state of North Dakota told the Quill Corporation, hey, you're selling sales tax, you're selling products into our state, you have to collect sales tax. Well, the Supreme Court looked at that assessment. They're like, no, you don't have to collect sales tax because you don't have physical presence. But fast forward to 2018, the same type of case, except this time it was South Dakota. And instead of the Quill Corp, it was Wayfair. But essentially, it was the same exact case. And the state of South Dakota said, you have to collect sales tax because you're selling to our state. Wayfair said, hey, no, we don't. We don't have physical presence. They even cited that 2001 Supreme Court case. But this time, in a bipartisan fashion, the Supreme Court sided with the state of South Dakota. The main reason is because of the internet. The internet has literally changed the landscape of how companies are doing business. So if you purchase online, you're getting a 10 to 12% advantage to brick and mortar type of stores. And because of that, then these states aren't collecting that sales tax. There's 32 states right now operating at a deficit. I'm sorry, now it's 41 operating at a deficit. They need to make up that money somehow. So right now, there are different levels of thresholds for this economic nexus. And it's not just, it adds on to what is the existing nexus activity. So if you're doing a trade show, that is still a triggering activity. Or if you have that click-through nexus, if you have a banner ad on a website, that can trigger nexus. But this is just economic nexus. It's an extra layer. So this is what's made sales tax even more confusing over the last few years. So take, for example, Georgia. In the state of Georgia, you need to have 100,000 in sales or 200 retail transactions, which means if you sell a widget for $1 a piece, that means after 200 transactions, regardless if you have $200 in sales, you have to file in the state of Georgia. However, in the state of Connecticut, it's $250,000 in sales and 200 retail transactions. So that means if you're selling turbine engines for $1 million a piece and you've only sold 150 of them, which totals $150 million in sales, you do not have to file in the state of Connecticut. In California, they don't care about the number of transactions. It's just 500,000 in sales. But in Kansas, if you sell even $1 in the state of Kansas, you have to collect sales tax. So it can get kind of confusing, and every state has different laws with different amount of thresholds. And with online sales, especially in the COVID era, a lot of people are purchasing online and remotely. So now if you sell into these states, if you hit a certain threshold, you may now be required to collect sales tax in that state. So this is another example of how sales tax can be really confusing. So we've talked about the zip codes and how they're inaccurate. and how every state has different levels of economic nexus trigger. And again, that nexus is just a requirement to collect sales tax. And every state has a different definition of what that is for economic sales. But look at products. So take, for example, a bagel in New York. A bagel is considered a food, so it's exempt. However, if you slice that bagel in half, now all of a sudden there's a tax associated to it. Why? Because it's prepared food, and prepared food is taxable in the state of New York. Take a candy bar in the state of Indiana. A candy bar, a Hershey bar is, taxable because it's candy. However, a cookies and cream Hershey bar or a Kit Kat or a Twix are exempt. Why do you ask? Because there's wheat flour in those candy bars. And wheat is a subsidized item in the state of Indiana. Since it's subsidized, it is now considered tax-free. Donuts in Texas, I don't understand the justification for this one, but if you buy 5 donuts or less in the state of Texas, that's taxable. However, if you buy 6 donuts or more, that's exempt. But it's not limited to just products or foods, as these are just the most fun examples, but there's literally hundreds of examples. These are just the most fun that I've found. Tree trimming in California. Well, if you use lights, that's taxable, but just the labor alone is exempt. Snow removal in the Midwest, it's taxable in Ohio, but exempt in Illinois. So imagine being a CFO or a director of finance or an accounting manager in Kansas, trying to figure out what these sales tax rates are in 2-3 states. Well, that could be daunting in itself, but imagine multiplying that by feasibly 30, 40, 50 states. It really does become time consuming. So industries with the most compliance risk are retail, obviously, because if you're selling directly to consumer, technology companies, because there's 250 different ways of selling software and taxing software in the United States. It's easily the most confusing part of it. And then manufacturing and distribution. And again, even if you're selling B2B, you do have to manage those exemption certificates to show exactly why you didn't collect that sales tax. And I'll give you an example, and those of you who have been in sales before, let's say it's the end of the quarter and you're really close to your quota. And all of a sudden you get a purchase order for 100,000 and that will make your quarter. It's a Friday afternoon after a long holiday weekend and you are excited that this just came in. Well, you call the person who issued the PO and you're like, thank you so much for this order. I just need your exemption certificate. Well, the guy says, sure, I'll give you an exemption certificate. No problem. I'm leaving right now for the long holiday weekend with my family. I'll get it back to you when I come back. Well, what happens after that holiday weekend? It's easy to forget. You can't get a hold of that person anymore. And the sales rep most likely is moving on to the next sale. It is really easy to fall through. And no salesperson is ever going to turn down a sale just because they didn't have that exemption certificate. They're like, oh, we'll get it on Tuesday. A lot of times it is forgotten. Not every time, but it happens more often than you think. So what is sales automation? It's a process to just improve efficiency and accurate. We determine where your business has that requirement to collect sales tax. We can file and manage your business registrations. We can apply current sales tax rates in real time via the cloud because we were built in the cloud. So automatic updates are done in real time. You don't have to upload anything. You don't have to download and update. We manage documents from end to end. We're the only company that does an end-to-end solution between filing sales tax, creating those returns, and managing those exemption certificates. And we also have that cloud-based software that tracks rates and automatically update. Another fun thing that we do is we could also tell you when you're approaching that requirement to collect sales tax within a new state. That'll show a heat map, which is a game changer for a lot of people. So almost any business can benefit from having sales tax automation. Businesses of all industries, unless you're working with the government or something in the medical field, not medical devices, but anything else, generally speaking, that's not taxable and you don't need automation software for that. But mostly any other industry, especially manufacturing, distribution, especially technology, and especially retail could definitely benefit. So we're accurate. We're the only company that does guarantee our sales tax rates. We're efficient. We do reduce those costs, managing compliance. And I'll say, that we equate our sales tax automation to payroll. 30 years ago, payroll was something that was, in-house. But now try to find a company that has payroll in-house. Most of it's outsourced, the ADPs, the paychecks, and so on. And why is that? Because it's a non-revenue generating activity. And I think it's safe to say that everyone would agree that sales tax is a lot more complicated than payroll ever does. One of the benefits of what your employees can do instead of figuring out what sales tax rates are or filing those manual sales tax returns is trying to figure out, streamlining accounts payable department, or maybe they can streamline the accounts receivable department, or looking at the feasibility of bringing a new product to market within a certain demographic and location. That's more of a revenue generating activity that your finance leaders can do instead of calculating these boring sales tax rates. And then we do decrease your risk from audits. Audits, as you all know, can take up to 90 days, 6 months, and it can cost hundreds of thousands of dollars for a company, not including the penalties that could be incurred. And this is by no means, a scare tactic, and that's the last thing I want you to think. But the reality is that 41 states right now are operating at a deficit. And no one's ever gotten elected by saying, hey, we're going to raise your property taxes or we're going to raise your income taxes. The best and most efficient way for these elected leaders to collect taxes without, quote unquote, too much blood on their hands is sales tax. So this is why you really should consider automating it. And then we also, focus on growth. We have over 700 connectors that can connect your systems with Avalara, whether you're using a POS system like a Salesforce or a CRM or a e-commerce store and NetSuite as well. So top tax challenges that companies face is basically a lot of people are unable to keep up with the laws that are constantly changing. There were 32,000 sales tax changes in the last 2 years alone. And because of that, they're getting inaccurate tax calculations. Another big thing is difficulty managing exemption certificates. And the integration with existing system technologies can be time consuming as well. So those are just a few. But the benefit is that you're increasing accuracy, in which case you don't have to worry about those audits. You do have improved tax compliance reporting and minimize resources dedicated to tax filings. And there's a few others. And feel free to look at this at Meridian's blog as well. So you don't have to write notes necessarily. You can if you want, but it'll be on Meridian's website on their blog section if you want to look at this afterwards. And then when you should pursue automation? I would say now. The best time is always now, but ahead of financial events or some other, whether you're pre-IPO or whether you have an investment company looking to purchase you, that's something that they'd be looking at. And a lot of times it's a condition of if you're being acquired by a private equity company or looking to be acquired by a private equity company, it's something that they have as a condition because they don't want the liability. So if you're launching in a new area, a new city, new state, that's something to consider automation. And to be honest with you, if you're in 3 states, you don't need Avalara. You don't need any automation for that matter. However, if you're in more than 3 states that you're doing in, it's really something to consider. Now, one thing I'll say is a lot of people say, oh, I'm only in 3 states. Make sure you know you're in 3 states, because a lot of times you may think you're only in 3 states, but you're really in 10 or 11. And we have a product that'll actually assess how many states you should be filing in. So again, a lot of leadership shifts could also be a trigger. A lot of CFOs have come from a place where automation has been. And then obviously you don't want to wait after a sales tax audit, but that's another trigger of companies to where they may want to look at automating. One thing I will say is if you know you have a liability and you know you have to file an estate and you've just been putting it off because, let's be honest, out of sight, out of mind. And if you don't want to, if you're just rolling the dice on getting audited, one service we do have and it's one of our fastest growing services, to where, let's say, you have liability in a certain state, we could represent you anonymously and talk to the states and say, hey, we have a client that is looking to pay their back taxes. They realized after the fact they want to make things right. What can you do? A lot of times we can waive your penalties and reduce those charges to where we can take care of that for you. Now, it's on a case-by-case basis, and we don't disclose your name until after we've come to an agreement. So if that's something that you've had a problem with, or you're thinking about how do you take care of, we can help you with that. So why pursue automation? Well, COVID-19, a lot of people are working from home. And if you're working from home, looking up these sales tax rates is not the most effective way. It was hard enough in the office. It's even harder working from home. And sales tax rules, as I mentioned, 32,000 sales tax changes in the last 2 years alone. And states are experiencing, as I mentioned, significant losses in tax revenue. They need to make up that money somehow. The state of Texas actually just hired 24 auditors to look at companies outside of the state that are doing business in the state of Texas because they want to collect that revenue. And automation ensures businesses remain compliant through the chaos. So we're really proud of this program. It's one of the most effective programs that we've had. And there's only, I believe, 6 companies in the country that offer this. So it was a certification program with these states. Now, if you look, there's 24 states, and the ones in greens are the one that I'm talking about. So Kansas is one of them. We're part of the SST program. And the SST is just streamlining sales tax. These states right here just wanted to make it easy for you to pay sales tax. So what you do is they'll give you free registration in 24 states. They'll give you a single identification number, uniform filing and form fees and exemption certificates. They'll give you access boundary and rules data, centralized source of updates. But the most exciting part, and these are for the states that you don't have physical presence in. So you can't have a remote employee, you can't have an office, you can't have a warehouse. They will give you free sales tax calculation software, Avalara, free filing and returns, and free audit support. So if you get audited by any of those states, we will represent you. You do not have to talk to the state auditors. And it's essentially the states subsidizing Avalara for you. I'm not saying it's completely free, but it does take off about 25 to 30% of the cost of Avalara in those states, which is a game changer. So let's say you don't know if you have that liability in those states. We do have something called a sales tax assessment. Basically, it's a self-serve questionnaire that analyzes information about a business to help determine if you have that liability. And it'll go state by state, and it'll figure out whether you have that economic nexus or physical nexus. Now, we do have a free assessment, but we also have a full assessment from Avalara. And we are running a promotion with Meridian to where normally it is $4,500. But if you take action before January 31st, it would be $3,000. So that's one thing that we can offer the clients of Meridian if you choose to take advantage of that. And it'll actually tell you exactly where your liabilities are. And you can't see it from here, but it'll show you, the yellows and the oranges, to where it'll show you varying degrees of, okay, you don't have any presence, you do have presence, or you're approaching that economic nexus level. And then you just have to complete that self-service guide questionnaire. It'll have an assessment within 3 business days of the analysis, and then we'll give you that full report as well to do as you like with no further obligation. So as I mentioned, Avalara is the only company that has that end-to-end solution. So managing your exemption certificates from end to end, filing your returns, and calculating those sales tax rates. We also do have a cross-border solution to where if you're doing things internationally and you need those harmony codes and those landing costs, we have something that is a solution as well. So we have a VP of at Avalara, and he lives in Canada, Toronto, and he bought a GoPro online. Well, the GoPro listed as $199, so he went ahead and purchased it. Problem is that when he got it delivered in the mail, the postman said, "You owe me $100 because of the landing cost tariff." Well, he sent it back because he's like, that's a bait and switch. And even if you do settle that cost, and even if you go to that company, he's really hesitant as to using that company again. Why? Because it felt like it was a bait and switch type of situation. And in a competitive situation to where you want to make sure that you're the most competitive, if you charge too much, your competitors are going to win that business. But if you charge too little, you're going to have a tax liability. So it's really important to just have that accurate sales tax rate and additional costs if you are doing international. So that's all I have right now. Thank you so much for your time. I really appreciate it. And thank Meridian for allowing me to speak. Does anyone have any questions that I can help answer?
Hey, George, thank you so much for the presentation. Really appreciate you presenting some clarity on a pretty complex topic. The promotion is much appreciated. If anybody has questions here in a moment, I'll share some contact information on where you can locate today's presentation, see future webinars coming forward, or send questions, comments, etc. to Meridian, and we'd be delighted to pass those along to George and his sales team. From a Meridian overview standpoint, we present ourselves to the market as experts in all phases of ERP solutions, and that's inclusive of the NetSuite solutions, but also partners like Avalara. There are hundreds of certified solutions that extend the value proposition of NetSuite, and Meridian can help you navigate that. We're focused, as I said, exclusively on the NetSuite solution. NetSuite's the market leader for comprehensive ERP in the cloud space and the small and medium business space. Meridian can be your trusted partner in all phases of the solution, from kind of kicking the tires to figure out if NetSuite's a good fit for you, to implementing it, and long-term ongoing support. Again, if there's interest in taking advantage of a Nexus study to assist you, please let us know. You can learn more. We'll post today's presentation and synopsis on our website, or send any questions that you may have to Meridian at sales@meridianbusiness.com. Again, George, thank you so much for the presentation today. For those that have participated, thank you for joining us. And please, if there are questions or follow-up, please visit the website, let us know how to get in touch with you, or hit the email site. So thank you very much, George. Appreciate it. And
thank you.
Everyone, have a great rest of your day, and enjoy the rest of the holiday season. Take care.